That old bank account can still create problems years after you stop using it. Inactive accounts don't just sit quietly forever, and most of the common assumptions are wrong. You might still be able to log in for a while, but that doesn't mean the bank considers the account active. And no activity doesn't mean no fees either, because some banks add dormancy or maintenance charges. Money can still move without you through fees, returns, or reversals. Closing usually isn't automatic, and old accounts can follow you through outdated contact info. What matters is the bank's definition of activity, because inactive and dormant are real statuses with real triggers. Most banks use a clock, and only certain customer transactions reset it, like a deposit, withdrawal, transfer, or debit purchase. Simply logging in usually doesn't count. Bank-generated credits like interest also usually don't count because you didn't initiate them. Even autopay can be tricky, since some systems don't treat it as customer activity. Ask the bank for the exact dormancy policy in writing. Once an account hits dormancy, a predictable timeline starts that can change where your money lives. Many banks mark dormancy after 12 or more months with no qualifying customer activity. After that, there's often a 3 to 5 year window before a sheet, which means the bank must send unclaimed funds to your state. Fees can drain a small balance fast, and the interest earned is usually tiny. You still own the money, but the claim route shifts from the bank to the state. Dormant status is less about losing money and more about losing access at the worst time. Online access can get locked until you verify identity, and cards or checks tied to the account may decline. Autopay can fail without warning, especially if the bank blocks transactions on dormant accounts. Some banks start dormancy fees, which can drain low balances to zero. The problem gets worse if the bank's notices go to an old address, because you never see the warnings. The easiest fix is small and proactive. Create one clear customer transaction and clean up your records. Make a small deposit, withdrawal, or transfer you initiate, so the bank's clock resets. Then update your address, email, and phone, because notices are how you prevent surprises. If you have extra accounts, consolidate so fewer balances can slip into dormancy. Before you move money, check whether dormancy fees apply and call the bank to confirm what counts as activity. If it's already escheated, file a state unclaimed property claim. Dormancy can start after 12+ months, and escheat often happens within 3-5 years after that. If you want to find accounts that fit how you actually bank and see the real dollar impact of switching, BankingHub matches you in about 2 minutes, free, no login or credit check. Links in the description.